let's talk about who the heck is Frank the Bank. Niche flyer right here. This is going to have probably my top 10 craziest programs on it, the stuff that really sets me apart, because if I came up here and just told you guys I did FHA and VA and conventional, I wouldn't be here, all right? So I do way more than that. We are truly a place where you do not have to go anywhere else, all the way from your highest level conventional buyer, all the way down to the guy who's buying the crappiest property on the block and needs private money and has no credentials of any sort, all the way to your illegal non-citizens here in the United States. I don't know how better to say that, but no papers, no problem with Lincoln Lending Group. So I said that in a huge meeting yesterday. So they're like, oh, and those who get it, right? So if you run with that community, you know that's exactly what they say. And then a rate sheet. We're going to talk about rates today. I'm going to dispel a couple rumors, and I'd love it if all of you would click on one of these. I prefer the one on the left. Follow me on Instagram or Facebook, whatever. But I do post out educational videos and product videos and stuff literally every single day. And I just started doing the Good Franken Morning motivational piece, because I am a bit of a motivational speaker as well. So people are asking me, and they're like, man, you're so vibrant and exciting, and you're always in a good mood. Why don't you post something every day about that for us? And I'm like, okay. So I started it 2 days ago. I think it was today my third day. So far, so good. And then Ryan, he does all my videos for me. So if you don't like my videos, he's the one you blame. So a little bit about me, and this is interactive, right, guys? So I just did one yesterday at GTAR with 75 agents, and I love it when you ask questions. If you have a scenario, if there's something I say that resonates with you, stop me, and let's talk about it. But first, a little bit about me. So I'm Frank Coto, not necessarily Frank the Bank. I was born here in Tampa, fourth generation Tampa native. Went to Jesuit High School, Florida State University, married my high school sweetheart, American family, 2 kids, boy and a girl. Stopped after that. Kids in high school and junior high. I want to shoot myself right now. Yeah. So if you guys live that life, running a business and running teenagers and blah, blah, blah. Yeah, it's a whole lot of fun. So anyway, I built this company. I founded the company in 2003. I had 2 business partners at the time. We worked for another mortgage company, family friend owner who started in the 80s during savings and loans. So I was educated by probably one of the oldest OGs in mortgages. So I have a very old school mentality. I even taught my guys as late as 12 years ago to go to the county courthouse and use the old microfiche system, which has now been digitized. That's what I was taught to do. Anybody know what microfiche is? I know I'm dating all of us in here, right? So that stupid thing you go through. We used to actually go and pull notes, mortgage notes out of that, and mortgages, and based on who the lender was, we could tell if it wasn't called non-QM then, it was called subprime. And we could tell if there were subprime mortgages, and that was during the first refi boom in the early 2000s, and we would call them up and tell them how they could refinance into a conventional loan at 6.75%, and they were loving it, right? So these people who think we're in a bad market right now, just haven't been in the business long enough, honestly. So why don't we, okay, going back to that, so I bought out my 2 business partners in 2006 and 2007. So yes, I bought a mortgage company right before the crash in 2008. Had I not done that, I probably wouldn't be in business today, because splitting revenue by 3 people is much more difficult than 1. So I figured out how to go thin. I learned the life lessons of business very quickly. Reestablished the company to rebuild it in 2010. And I did something crazy in 2010, which has been on my flyer in some way, shape, or form for almost 15 years, where it says no junk fees ever. I used to say no lender fees ever, but compliance-wise, not such a good thing to say. So we switched it to no junk fees ever. What does that mean, though? What does that mean? That means I don't charge my originators anything, all right? I have 42 originators working around the state, mostly in the Tampa Bay area. I don't charge them any SRP, I don't raise their rates, I don't pad their rates. Yes, I do correspondent lending, yes, I do regular lending, yes, I do private, but I don't add anything. Like every other lender and broker in town, they're padding their rates before it ever gets to the originator. And then the originator wants to make a commission, so he increases the interest rate. Well, what happens in the retail world, for example, Bank of America, Wells Fargo, all the big boys, they start by padding the rates at the corporate level, then they send it out to the 1,800 branches, then the branch manager raises it, then the originator raises it. So that, guys, is wholesale to retail in a very quick nutshell, right? We are true wholesale because I'm not adding anything. So your client is getting the best wholesale rate. So let's start with rates before we go into programs and talking more about me. I'm sure you already did the math. We've been in business 22 years here. I don't know any other small mortgage company that is in business that long. But let's, somebody Google while you're eating, Google the 30-year fixed rate right now. Just grab your phone, Google 30-year fixed, today's 30-year fixed rate. And let's see what Google says for conventional, FHA, VA, whatever it is. And then we're going to look at what I have in my little rate sheet that I did for y'all this morning.
7.25.
That's a good guess.
6.82.
6.82. All right, so that's the number that, the same number that popped up yesterday, 6.82. So the reason I made you do that is because that's what your clients are doing. Every single day when your clients are getting ready to talk to you, they're looking on Google and they're typing that in. So let me ask you this question. How many clients would decide to buy right now and not wait if they knew that the rates were 5.5%? Right? Would that not get them off the fence? Hell yeah, it would. So why is the news media not telling you this? Corporate greed, all right? I preach about this every single day, and I do a quick little example. If you're a businessman and you're selling a widget for $5 and it costs you $1 to make the widget, and then the price of that widget goes up to $2. So you raise your price to $6 to cover your margin, right? And then all of a sudden the price of the widget goes back to $1. How fast are you going to drop your price to $5? Exactly. That's corporate greed, right? That's bank greed. Could they be offering the rates the way I do? Absolutely. Are they making a ridiculous amount of money on spread right now because they are not doing it to 360 million Americans? Yes, they are. So who can fix this? Only us. Only the people in this room right here. So what I do is I send out this rate sheet, usually at least once a week on social media, or if there's a major change, we'll send it out more. I want you to take this sheet and forward it to your clients. What we do at Lincoln Lending is something called Project Mockingbird that a lot of big news organizations do. And I'm sure you're going to understand what I'm saying when I say this, but when I have all 40 of my guys in one room, we all get the rate sheet in our phone. We go to Facebook, and this is a great thing for you to do with your teams. You go to Facebook, you all post the rate sheet at the exact same time. And let's all assume that everybody in the room has 1,000 friends. 40,000 people get hit with the same message at the same time. That's how we get people off the fence. We have to show them what's real because the news is not reporting it. All the people here on the news is, oh, the prime rate went down. Well, the prime rate has nothing to do with your 30-year fixed mortgage. That's your home equity line, which is a great product. Don't get me wrong. We're selling a crap load of home equity lines right now. But what people really need to know is what are the 30-year fixed rates. So your FHA and VA rates, this week we have locked 5.5% on both FHA and VA. Last Monday we were locking 5.25. We were this freaking close to the 4s. But nobody heard that. Nobody knew that. You know who hears it and calls us? The title company closers. They call us and go, holy crap, we just closed 140 transactions and you guys had the lowest rate. What are you doing? Are you buying down the rate? No, we don't have to. Now your client is gonna pay if they want the lowest rate, just like anything. You want 5.5, 5.25, you're probably gonna pay a point or two depending on the day. But for that same client who doesn't wanna pay, I'll just give them 5.99. I'll give them 6%. I'm still 0.82 lower than anybody at 6%. I'm 0.82 lower than what the average is across the country, and they can pay 0 points. You guys follow how that works? Like points and cost and rate are directly related to each other. So if somebody doesn't like to pay the cost, which I'm not a big fan of telling them to pay cost right now, because we are in a decreasing rate environment, right? It is going to happen. They are going to continue to go down. Do I think they're gonna hit the 3s? No. Do I think we're gonna see the 4s? Absolutely. Do I think we're gonna see the 4s this summer? Yes. I think we are gonna see the 4s this summer, right? And listen, last week, you could have bought down to 4.875, right? Now, I would not have given a client the advice to do that. Why? Because if you pay points right now and then the rates drop, what are you gonna do? You're gonna refi, and you're not giving yourself enough time to make up the points. So a savvy client, right, just two types of clients, the guys who understand the time value of money and understand not throw it away, and then the guy who is just focused on payment. By the way, that's this whole buy down thing that you guys have been hearing for a couple of years, the 2-1 buy down, the 1-1, the 3-1. It's bullshit, okay? If your client wants it, I'll give it to them. The 2-1 buy down can be good for somebody who is only focused on payment, but that is your least savvy client you're gonna work with. The savvy guys know, I don't wanna take the $20,000 in concessions from the seller to buy down my rate for 2 years, because that's all it is. All they're doing, if you didn't know that on a buy down, is they're just taking the money and they're applying it towards the payment for 1, 2, or 3 years. Nothing else is happening. So I always ask the client, would you rather me give you $20,000 today, or would you rather $20,000 over 2 years? Who is gonna take the money over 2 years? Take the money today. Get all of your closing costs paid by the seller, everything. And then when the rates drop, we refinance and pay your points then. I'd much rather you guys buy down from the low 5s to the 4s instead of the 6s to the 5s. Make sense? So rate sheet, probably one of the most exciting thing for me to show you guys is real wholesale rate sheet. Other thing, I'll just go ahead and go over this part now since we're talking rates, and then we'll talk some crazy stuff. I put this red mark here on my paper, this red line, 20 years ago. I added this to this flyer, all right? Let us review and beat a competitor's estimate in 15 minutes with no application. I did that for a reason, because if you call 20 banks right now or 20 lenders and you say, I want a written estimate of all my closing costs with rate and everything, they're going to ask for an application. Most of them because that's part of their compliance requirement. The bank or lender says they need it. It's not necessary. We don't need it. So here's what you're going to do with your client. You're going to tell your client, you just met this awesome guy, this awesome lender. He's got the best rates. I want you to go do an application with him right now. And they're going to say, listen, I've already done an application. I don't want to start over. That's a lot of work. And you're going to say, no problem. Because Lincoln Lending Group does not require an application to give you an estimate. So you're going to take 30 seconds, Mr. Client, and you're going to send us that written estimate, and you're going to verbally or in a text tell us the credit score the other lender got. Not freecreditreport.com, not Credit Karma, because we all know those are not real reports, right? And my team in 15 minutes is going to give a competing loan estimate, itemizing everything. We're going to show them how much money they can save, and then we're going to ask them for an application. It is the most non-confrontational approach you could ever use with your client. How can they say no to that? If they can't take 30 seconds to get a competing offer, then I guess they're just not that financially savvy. But I would definitely push them to do that. There's no reason to push them to do an application. They don't need to. I will tell you this, we will win 9 out of 10 deals. The ones we don't win are the loans we don't want, right? Because we can beat anybody. I own the company. I control the margins. I control the pricing. I don't mark it up on my guys. So the way I explained it yesterday in the seminar is I picked on Danielle Ticcio and I said, if Danny calls me and tells me she wants to do a $40,000 1971 mobile home, which by the way I can do, okay? We can do pre-1976. Not on a land lease. No, I take that back. If it's a 100-year land lease under certain conditions, I can do it. But the key to the message yesterday was I raised my hand. I tell everybody raise your hand if you've ever heard of a lender that says they can do a pre-76 mobile home. Nobody out of 70 people raised their hand because most lenders don't even know you can do it. We have one investor out of 40 investors who will do a pre-76 mobile home. But I asked Dan.
Move to the current location.
Boy, you know, what do you sell mobile homes? Oh, you're in Pasco. Okay, I get it. No, it's there are programs for that. They're not supposed to be moved.
Because I would have sold up. I have a really nice mobile home in Spring Hill that has been moved to the current location. If it hadn't been moved, I would have sold it like the first day, FHA, VA, whatever. But it's been moved.
Text me, and as soon as I get out of here, I will send out a blast to all my investors, and I'll find out who'll do it. So it's only been moved once, though, right?
That is my understanding.
All right, because that's usually.
94, acre property, no HOA, not a flood zone.
Okay, just tell me that. Tell me that in a text, and tell me it's only been moved once, and I'll get it out, and I'll get you an answer. But I think I can do that. Yeah, exactly. And listen, you can always do that private money too, right? And that's the beauty of having a private money lender who's also a regular lender is when stuff hits the fan, we can do it.
I actually have a buyer who can't get approved conventionally.
Beautiful.
Great chat.
See, that's what I love. Yep, there you go. See, we already have a deal. I love it. And then we're going to get feedback from everybody. So talking about rates, that's great. Told you how to overcome that objection. How do you refer me business? I'll just break it right now. I'm an originating broker, right? But I'm not in the trenches. I'm not running credit. I'm not doing debt ratio. There's no way I'd have time for that. So I have a team of 3 people who do it. They're not allowed to be out of the office when I'm out of the office. They're always at their desk. So right now, my team is doing applications and running things, and I'm standing here talking to you. So anybody who wants to be part of that VIP team, just text me directly. I'll introduce you to Jeff, Bill, and Beverly. You will be great, right, Kelly? You know how that works, right? Great team behind the scenes. But we'll get anything taken care of you need. Now let's go into some crazy stuff. So I did this. We don't have time for the full presentation, so I'm just going to run through a few of my favorite slides. And actually, you know what? Let's do this. Let's have everybody pass a card up, and we'll have Don secretly choose one behind your back or something like that. I don't know if we have a cup. I'm going to give away a spot on my radio show. I've had a radio show for 11 years on 970 WFLA. We're actually on 3 radio channels, 102.5, 970 WFLA, and 97.5 FM. We're also a podcast on iHeartRadio. So one of you guys is going to get chosen to come on the radio for an entire hour with me. The agent that got chosen for last month, we do this usually once a month, she mentioned 3 listings that she had just put on the market. On Tuesday, on the Instagram live, it played on the air Saturday and Sunday, and a radio listener called Monday morning and went into contract Monday afternoon. I didn't get the mortgage, it's okay, but thank you on the back. But it was a cash buyer, right? So hey, great for the agent, right? So the radio works. I've had that happen twice to real estate agents that have come on with me. We're just gonna talk all about you, by the way, on the radio. Yeah, oh man, Kelly put 6 of them in there. This is my VIP team. They are real people. I actually had them drive in yesterday for this. That's Bev, Jeff, and Bill. They're the ones who do it. This guy has 32 years experience. This guy I personally trained 15 years ago. And this one I trained and brought on as my VP of Ops 10 years ago. Right? So these are not newbies. I don't work with newbies. This is just some of, I train newbies, but not under my team. This is just some of my other staff. You guys can always go to the page and select the person that most interests you, which is me. But anyway, following us on Facebook. Yesterday, so I got asked to do a big presentation on these products. Do you guys want me to touch on these? Renovation, construction, and vacant land? Message? Okay, go ahead, question.
I mean, using construction.
Okay, so I'll run these quickly for you, no problem. These are on everybody's mind right now. So construction. What sets us apart on construction? And first of all, I'll explain this, is the construction loan we're talking about is when your client calls you and says, hey, I've got a piece of land that I want to build on, or I want you to find me a piece of land, so you guys are going to get paid on the land, right? What sets us apart on this is the OTC initial. What that means is one-time close. Prior to having this product, the old way of doing construction was you went out and find them the land, they go get a land loan, they pay closing costs. Then they get a construction loan, interest-only draws, right? They pay closing costs. Then when it's done, they get the end loan. They pay closing costs. What did we just hear? They pay closing costs 3 times. The OTC is a one-time close loan. They buy the land and build in one closing. So you find them the property, as long as they have the builder picked out and know what they're going to do and have their plans, we're going to close one time on the purchase, the construction, and we set them up for an end loan with a forward lock. All right, so we protect them. Now, can I change that end loan before they close, before they are done? Absolutely. But most of the time, this works out very well for them. The rates are not higher. It saves on closing costs 3 times. It's FHA, conventional, and VA, no problem. What are the down payments? Same as FHA, VA, and conventional. 3.5, 3%, 0. Any questions on that? So construction, super easy.
So the construction, you can buy the land, do the build, all that for VA as well.
Same thing,
0?
100% financing, all day long. Yep, not a hard product. If they already own the land, you get to use the value of the land as your down payment, right? So you own a land and it's worth 20% of the build of the total price, you already are in a conventional loan with 20% down, no PMI. It's an awesome product. Not hard to close. We do hire a HUD inspector or make the client, oh, go ahead, question.
I want to ask, does it make a difference the borrower is a person or it's a LLC or joint venture?
Great question. So this product that I'm talking about here is only for, this can be primary residence, investment, or second home, but this is only for a person, right? If it's in an LLC, that would be investment only, and that would be a non-QM product. So it wouldn't be FHA, VA, or conventional, but we do have a construction loan for people who do want to do investment in an LLC. However, if your client qualifies conventional or government, what we're going to tell them to do is use their own name to close and then put it into an LLC, right? And this brings up a good point. I want to explain to you, your clients need to tell me everything. If they want to be in an LLC, tell me up front, because certain investors, certain lenders, closers, whatever you want to call them, servicers, they will have a problem if somebody switches it from their name to an LLC post-closing. But there's a ton of them that don't. So just tell me up front, that's what you want to do. So here's how I explain myself to your clients. I tell my whole staff to do this. We are your attorney. You have attorney-client privilege with us. You can tell us anything, and we encourage you to tell us everything. And then the underwriter is the judge. So now we have to figure out, what do we tell the underwriter? It's not fraud to not tell the underwriter everything. The underwriter only needs to know what they need to know. I get turndowns from Truist every single week, and I laugh my ass off because the originators in there do not have a damn clue what they're doing. They turn down people for guidelines that are in the Fannie Mae guide that they can do. And I'm not calling them, telling them I'm taking their loans, right? But they can do these loans. They just don't know what they're doing, and they're not asking the right questions of the client. Therefore, they are not structuring the loan properly for underwriting. that make sense? Did that answer the question?
Yeah.
All right, perfect. So this would be an interest-only draw period. How long is that draw period? However long the HUD inspector works out with the contractor or builder. Right? The HUD inspector represents your client. He's the one that sets up the draw schedule. He's the one that makes sure the builder stays honest, makes sure he stays on schedule. It's like $750 the client ends up having to pay. It is worth $7,000 to have that person.
What about if you have a current home there and a mortgage, but you want to tear it down and rebuild it?
That can be
That's what I'm
done.
talking about.
So that can be done two ways, right? And I'm actually going to go into the next one. But on a construction scenario, that would really be no different than if you have a wooded lot and you need to clear the wooded lot to build your house. We're going to clear your wooded house and start building the other house if you want to do construction. But if you have a mortgage, the mortgage has to get settled. So then the problem comes in, how much equity do we have to get rid of the mortgage? That's a tough one. Most of the time, you're going to have to wipe out the mortgage and then go into loan. Or, I got another option for you. Ready? Let me see. Renovation financing. All right? Renovation financing, you can't tear it down, but you can tear it mostly down. You have to use the same slab. I think you can add to it, but you can't. Thanks for coming.
Great job,
Yeah.
man.
Thank you. Thank you.
Sorry, I haven't listened
No,
to one.
you're good. You're good. If you win the radio, we'll let you know. All right, so no, you guys will win. Anyway, no, so anyway, you can bring him as a guest. So you can't tear down to the slab. You have to leave a couple walls up, but I've seen lots of creative things happen with that. So that would be a renovation. Now, when you do a renovation, anytime it's a renovation loan, we are paying off the existing mortgage and adding to it with a new mortgage and doing the renovation. And I tell this funny story like yesterday. Everybody thinks renovation is for totally dilapidated houses, crappy houses, things that don't qualify. No, it's for when I walk into a house with my wife and I look at it and I say, man, this is move-in ready. We could just do this. We could put a little paint over here. I could put my pool table over here. I could do this. And my wife walks in and goes, hell no, this won't do. I need a new bathroom. I need a new kitchen. I need to do this. That's what renovation is for, right? I want a pool. Absolutely. We just approved one of those on Monday. So renovation can be for primary residence, investor, or second home. Now, big word here is investor. Previous to today, you may have thought that your investor can't go buy a dilapidated house except for on some sort of hard money loan or crappy non-QM loan. They can do conventional FHA or VA in a total rundown house, all right? Fix it up using the renovation loan and then rent it out. So how does a renovation loan work? Go ahead.
They have to be able to get insurance on it to close.
Yes, but we have agencies that will take care of you on that. They usually do a TAPCO policy or a Lloyd's of London or something like that. It's a renovation policy. It's a builder's risk policy is what it is, right? So yes, we can get it done, absolutely. So here's how the math works. You take the purchase price, let's say it's $400,000, and then you take the renovation, let's say it's $100,000, that's $500,000. And let's say you're going conventional and you want to put 5% down. You're putting 5% down of $500,000, as opposed to 5% down on $400,000, which is 20 grand, and then spending 100 on renovation, you're out of pocket 120 plus closing cost. On this product, you're putting 5% down of 500, you're out of pocket $25,000. Does that make sense? That's the sell to your client. Hey buddy, you don't have to do anything but 5% down on the renovation, or if you want to do 20, or if you want to go FHA, it's 3.5. Your only limitation is the loan amount limitation of the product. So like Fannie Mae is like, what, 890,000 or something maximum loan right now. FHA I think is like 492 or something. That's your limitation to how much you can borrow. Any questions on that?
What if they wanted to sell it instead of rent it out? How long do they-
That's a great question. So the problem with that, it can be done, right? But the problem with that is called an EPO, all right? It's not a prepayment penalty because we're not allowed to have prepays on primary residences and government loans anymore. So what will happen is Fannie Mae, FHA, and VA are not into flips, right? They want you to make 6 to 7 mortgage payments. If you don't, they can't really do anything to your borrower. They come after us. And so we have a form in our documents up front that it tells your client, if you don't make the 7 payments required on this conventional loan, you're going to owe us back whatever the buyback is on our commission, right? And sometimes the lender, because I send them so much business, they won't do a buyback, right? Sometimes they do. Let's say our commission was $5,000. Sometimes they ask us for $2,500 back. So the client is signing that they'll pay that. So I just go over that up front with your client. Say, listen, you got 2 choices. I'll do the flip for you, private money, or we'll do it non-QM on a fix and flip product with a little bit higher cost and higher interest rate. Or we get to the lower cost and lower rate, which really doesn't matter when you're doing a 3-month transaction anyway. I'll give you the lower cost and lower rate, and you're just going to pay the buyback if I get charged one. And I'll tell them up front the maximum that it would be. The maximum would be, it'd be whatever we earn on the loan. So if we charge them 2 points and we get a full buyback, they're going to pay 4 points. But it may work. You just got to build it into the
best path.
I'll give them the best pat, yeah. And we can do that private money, but see, you're going private money, you're going to pay 5 points right off the bat. Makes more sense just to do this, and then you are going to have a lower interest rate, right? And less money down as well. So there's a benefit. We can game the system, basically. I just got to be honest and upfront with them.
Is this credit score based on whether they qualify?
Yeah, exactly. So for the renovation loan, FHA, VA, conventional, same guidelines, which for us are a lot looser. I'll get to that in a second. But like for example, on I don't want to spoil it, but like FHA, you could probably go down to 580 and do a renovation loan. Where conventional, nobody can do conventional under 620. Matter of fact, I'll ask this before I even get to that slide. What's the minimum credit score? And if you already know, what's the minimum credit score on a VA loan? Let's get some answers. What do you think it is? Take a guess. Great guess. What do you think?
I'll answer that.
Minimum credit score. Yeah, you go last. What do you think the minimum score is?
580.
Yep.
I'm gonna go 1.
I was like, I already got you on that.
600?
600?
Play Price is Right.
I would have said 580.
Okay. All right, the answer? There is none.
There is none.
The VA. Oh shit! I'm sorry. I took it, Kelly. I'm sorry. God, I got all the glory. Frank MF Coto. Anyway, so there is none. The VA has no minimum score. But the reason you guys gave 580 and 600 is because those are the two, 580, 600, and 620 are the 3 most popular overlays in the industry. What happens is the VA comes out and tells all the banks in the country, hey guys, we don't care what the minimum credit score is as long as they meet all these other guidelines. But then the banks, because again of corporate greed, they go in and they create a minimum credit score. But why do they do it? Why does the bank care when they sell off the mortgages? Anyway, right? Because the mortgages sell for more. If you have a minimum 620 mortgage pool of $10 million in mortgages at 620, it's going to get this much on the secondary market. If it's at 580, it's going to get this. If it's at 400 or 450, it's going to get this. It's greed. I mean, greed, it's business. I hate to say greed, but they're my competition. So anyway, it's business, right? So they're wanting to make more money, so they create overlays. Out of 40-something investors, I only have 2 that follow the VA guidelines to the T. All of the other ones have some sort of overlay. And with FHA, it's the same thing. FHA has no minimum score, yet I can't find a bank in this country to go under 500. And I have tried for 20 years to find someone and nobody will, which tells me there's no FHA loan buyers on the secondary market willing to pay for loans under 500. But VA are one of the highest performing loans in the country. So even PA, like the lowest credit score we've closed, 487, 100% financing. 98% of mortgage originators and bankers wouldn't even run that approval. If it hit their desk, right. So funny, it took 3 months to close them. This guy had an inquiry list on his credit this thick because he went to every bank before somebody, it was actually Cindy Hayden, met me years and years ago, went to the thing, and she's like, try this guy out. It took 3 months to close him because there was a manual underwrite, there was a lot of crap. Single father, Marine, 4 kids, went away to fight for our country, came back, he left his kids with his sister. When he came home, he left his credit and his kids with his sister. She batted 500. The kids were alive and well with all their fingers and toes. His credit was destroyed, right? She paid nothing. So what he did was he started getting his credit back in order, and all the VA wants to see is that you have recovered or you're trying to recover from the issue, and that was a perfect explanation. So it was a hard loan, but I will tell you this was years and years ago. I get a call probably every 3 or 4 months from somebody referred by that veteran. Because that veteran, I mean, he cried at the table, I cried at the table, the kids were living in a 1 room. That was, what's that?
That was Cindy Hayden, you said?
Cindy, yeah, it was years and years ago that we did this VA loan for a super low credit score guy. So I've done a ton of stuff with Cindy, so we have all kinds of great scenarios. But anyway, we get more referrals out of a client like that than I'll ever get out of the doctor who thinks his shit doesn't stink and can go to any bank in the world, right? So I'm happy to work on the harder loans. Here's another fun trivia question. What's the maximum debt ratio on a VA loan? There is none. There is none, right? But most people around the room would say 50%, 55, 58, maybe 60. Highest I've ever gotten approved, 73.2%. 73. And that was actually a Cindy deal too. Somebody approved this guy for, another lender approved him for $315,000, and they couldn't find anything under $400,000 that would fit the family. So they brought it over to me, we ran it, Lo and behold, we were able to get an approval that the other bank couldn't because the bank simply had an overlay. The VA said yes. USAA and Navy Federal said no. The ones who are VA, they're the worst. They have the best advertising, and they have good insurance. USAA does have good insurance. Their lending sucks. They rip off veterans beyond belief, which actually I'll bring this up while we're talking about VA stuff. So anyway, I'll tell you this, and then we'll get back to the, actually, I'm squirreling. Let's stay on topic. Debt ratio, why is it important? Because we got that buyer from 300, he closed at 395, 45 days later, right? So we got the guy almost 100,000 more just because of my no debt ratio limit, that I follow the actual rules with VA. So I encourage you with your veterans, the next time you're looking at a contract and here's your conventional guy that everybody thinks is awesome, and here's your veteran, let's pick the guy who A, took a bullet for the country, B, let's pick the guy who, if he screws up his credit mid-transaction, which not for nothing, what do buyers do, right? If they buy something stupid like furniture, debt ratio goes up, credit score goes down. Well, if it's conventional and you go over 50 debt ratio or under 620, you have no loan. Nobody can do it. You're pulling that loan, you're switching the program, you're redoing everything. If it's a veteran, you're not doing anything. If it's with me, I'm literally just doing nothing. I'm updating the credit, right? I'm rerunning DU, and as long as it approves, it still approves, right? And it will, because I'll just go manual if I have to. But what I was about to say is, I lost my father a couple of years ago. He was a Silver Star Purple Heart Marine, and he worked with us for a couple of years. It was awesome. I got to be with my dad for his last couple of years in my office. And he would talk to veterans and talk to reverse mortgage people. And we did this in his honor, actually before he passed away, which, where is it on here? Oh, there it is, the second thing. LLG VA guarantee. We will beat, I'm telling you right now, in writing and to your face, I will beat any written estimate for any veteran, cost and rate on every single deal. As long as I have a written estimate from a legitimate company, I will do it. I started this 4 years ago, and I've closed about one free loan each year for the last 4 years, but I cannot tell you how many referrals I got from smoking the competition, giving them a 499 or something stupid. I get so many referrals from that. It doesn't matter, so I'm willing to do it. So I'm telling you right now, if you have a VA buyer and you don't send me the estimate, you're hurting the veteran, because I'm going to beat it, even if I lose money. I love this. 813-765-1239.
He closes 100 deals a year or so.
100%. That's my real cell phone number, goes directly to me. So
Yeah, he's really good.
yeah, I don't go to bed with, even if it's 1 in the morning, without responding to every single text message I have. I can't. Like, I wake up the next morning, I already have 50, so I'm gonna be
Can I just tell you?
yes,
that,
please, yes.
2 months ago, I went, cold call, whatever, veteran buyer signed with him, it's my guy, right? He was pre-approved, found in the perfect house in Holiday, never owned a home. He's in his 50s, almost 60, never owned a home. He just wants a small, quaint, 2-bed, 1-bath, 1-car garage home. He just needs a garage, that's all he wants. He works on cars. Anyway, pre-approved with Rocket Mortgage, and I'm like, yeah, I know. And got his pre-approval letter, some time has passed, nothing, and only pre-approved with Rocket for $160,000.
Oh, God.
So find a house in today's market for $160,000.
With a garage. Maybe you find the garage, not the house.
In Hollywood, it's perfect, we went to see it, let's write the offer, great. I called his lender because I'm loyal, he came to me with the lender. Lender said, I'm sorry, his credit score fell down, he's not approved.
Oh, God.
So I just texted you.
Beautiful.
Contact information.
I love it. I love it. And his credit card, if that guy was already approved with another lender, he was probably approved with something over 620. He probably only fell into the 500s. It's probably not even that big of a deal.
So he said, he literally told me that the primary bedroom in this small, like 900 square foot home is bigger than his 1-bed, 1-bath apartment.
Oh my God. I would love to help that guy out. And guys, listen, there's a lot of lenders are going to tell you there's a minimum loan amount. There really isn't. They're making that up. Obviously, we don't want to work on $40,000 loans, but if you're my partner, and the way I said it, like with Danny in the meeting yesterday, is if Danny calls me and wants me to do that $40,000 1972 single wide because she sends me all her business, it's going in underwriting, right? If a random phone call comes in from an ad for that, I'm not putting it in front of your $400,000 loan. I'm going to make sure that it's real clean, or they're going to be a partner before I do those really low ones. But anytime you ask, I'll do it. I'll definitely do
I
it.
just don't really care to work with Rocket.
No, oh my gosh, please. So you know Rocket, you guys can all jump online right now, and in less than 3 minutes, you can have $1 million pre-approval letter because they verify nothing. You can literally put it in there, tell them your income, spit it out. It will be in your email. That's why agents don't like Rocket, because they all fall through, because they're not actually doing it, which I'll bring up. What we do is if your client is self-employed or if they have rental properties, right? One of those two things, I'm not giving you a pre-approval unless you say, Frank, I want a courtesy pre-approval, which we do those all the time. We've done those for Kelly. It's like, hey, listen, I know this guy's good. Just talk to him for 5 minutes and give me a letter so I can get the offer in. Got it. As long as we're on the same page, it's not worth the paper it's written on until I get the app, right? What I want is tax returns. If they have rental properties or they're self-employed, you have to have 2 years tax returns. You have to have the leases. You have to have the insurance and all that in order to run the debt ratio. And any lender who doesn't is just screwing you guys because you're going out there showing properties on a BS pre-approval letter. So I'd rather you give us a day or get a courtesy letter just to get your offer in, and then we encourage the client to get me everything they need quickly. And back to your point about my team, I'm going to introduce anybody who texts me today or any scenario. I will talk to anybody you want me to, just like Kelly knows. If she says, Frank, you talk to him, Frank talks to him. My team is amazing. They have years and years of experience. We will get them in front of my team to do all the work and the underwriting and everything, and I'll introduce you all to the team right away. So let's see. So all the renovation, you can do FHA, VA, Fannie Mae, non-QM, even hard money. I love doing hard money loans. I do them all day long. I'll talk about that real quick because that's normally at the end. How much time do I have? I don't want to. 5 minutes. Okay. So private money, real easy. Text me with any private money scenario. I don't care how freaking crazy it is. I'm going to review the scenario, and I'm going to go through all my crazy programs first, and 8 out of 10 times, I'm going to find something for your client on this list instead of having to go private money. And if we have to go private money, great. It's 12%, interest only. I do a 1-year balloon, and what sets me apart from every other private money guy in the world is I charge no prepayment penalty, right? So they can borrow the money from me for a day or a year, and they pay no prepayment penalty. I do charge points. Generally, it's 5 points. I'm not the cheapest guy in the room. I'm not the most expensive by far. Most expensive is 10 and 14. Cheapest guy is usually 10 and 2, right? 10 and 2 guys get screwed out all day long. You know, I'm going to do a little safer. What down payment do I want? I like to have at least 25% equity. I can cross-collateralize. So if they don't have equity in that property, or they don't have a down payment, maybe they have a portfolio with something else. Let me put a lien on this one and this one, and we'll get it done that way. Talk about, let's see, what else is real niche-y I can tell you about in 5 minutes. No doc primary residence loans. Hardly anybody's doing that. 2 investors in the entire country offer it, and I have both of them. What that means is if you have a client that can't qualify for anything, but they have a good credit score, but they just don't show enough income in any way, shape, or form, bank statements, P&L, none of those weird programs, and they just can't do it, 25% down, they're approved. Right? Interest rate's going to be higher than conventional. There's going to be a couple points on it, but then we're going to show him a path. We're going to show him what do you file on your taxes to get this thing refinanced in 6 months, and we'll get him out of it. Land loan, I'll mention this real quick because it is popular. 35% down, we can lend on raw land. It can be a lot in a neighborhood. It can be a piece of land with trees on it, and that is a long-term loan. It does not have to be built on. It is a 20-year loan. Very rare product. So you've got somebody who wants to buy a $1 million piece of land and the banks are telling them no because they want to build on it, bring it over. Can't go under $100,000 on that. So this isn't for your $20,000 lots. If they need that, we've got other products for it. Let's see, what's my other favorite stuff? That's for newbies. You guys are not that. Nordstrom method, we already talked about. Nordstrom method, I made this up. I talk about Nordstrom shirts being imported from Singapore, blah, blah, blah. You all have your rate sheet already. You already won the mortgage knowledge quiz. You already learned about overlays. Yes, you can use mattress money for down payments, by the way. We don't source gifts anymore. So if any of your lenders are sourcing gifts, your client says, oh, your broker says, oh, they got to put the money in the bank for 30 or 60 days. Hang up, call me. We don't need to do any of that crap, okay? We don't have to source your gift funds even on government and commercial loans. And I can create ledgers internally to make cash into verified money legally. We have a buy before you sell product that if you're selling a house and they're wanting to buy another house, I can get them the equity either through one of these crazy products or through my own pocket, private money. As long as you're giving me the other mortgage, I'll lend your guy in second lien position up to, who knows, 80% to give. You got 3 of them? Done, they're approved. I love it. So buy before you sell is very popular right now. Cindy and I have done like 3 of those together. I keep bringing her up. Questions? Let's see. FHA, here's an awesome product right here. 100% FHA financing. 600 minimum FICO, but what's going to impress you besides that? No first-time home buyer. We don't need DPAs, guys. You don't need those stupid down payment assistance programs that require 640 credit score and a 45% DTI. You can do no first-time home buyer on the FHA program. Better terms than a DPA. We have the kind you pay back, the kind you don't pay back. Only need a 600, and here's my favorite part, duplex. You can literally put somebody in a duplex for no money out of pocket. Now, they have to live in one of the units for a year. But if they want to be an investor with no money, wait 12 months, put them into another one, rent that one out. Now you just got that investor with no money, 3 doors under management in 13 months. Any other lender tell you you can do that? I love that. So that's 100% FHA. We also have 100% conventional. Shit, I didn't do this one yesterday. We have doctor loans, but I don't just call them doctor loans because we'll give 100% to anybody who's a professional. You're an attorney, you're a CPA, you're an ologist, you're a chiropractor. I know people make fun of that, but they're doctors. We give them 100% financing. What's on my jumbo ratio? Our jumbo is sick today. 6.5, 30-year fixed jumbo, $2 million. We're gonna beat anybody on that jumbo stuff. They can do arms, they can do fixes. We did the no lender fees. There's Anna, boom, boom, boom. Anna Vega. Bank statement 1099 and P&L, Casa Fina. No income investor, that's your DSCR. So investor, I promised you investors. So what sets us apart for investors? The DSCR product that everybody talks about, the no income, no ratio investment loan, what the most lenders ask for is that the rent has to cover the mortgage payment by $1. I don't need to do that. I can do it with, I don't care if the rent's $800 and the payment's $2,000. I'm going to tell your client to put 5% more down and I'm going to approve it. Right? I'm not limited to 4 units either. One of my investors will go to unlimited units. Most of them will cap at about 25 units. So what does that mean? Assisted living facilities, rehab centers, hotel, motel, Holiday Inn, multifamily, multifamily 8 units, whatever. We can do that on DSCR. It's not just commercial. I can do it through my commercial residential line. My investment rates on my DSCR are this far off of conventional. So you got an investor who probably will qualify with his 14 tax returns, but just doesn't want to go through it. For a 1/4 point higher in rate, I'll just do a DSCR, no income verification. He'll probably have a 2-year prepay to do that, or he can have no prepay and just pay a tiny bit higher. But we can do the investors who just don't feel like providing income. Any other investment questions?
Can I do more than 4 residential single-family house in one loan? And something called a blanket loan to have several.
Oh, yeah.
At the same time?
Absolutely. We can do blanket loans with partial release clauses. It's a rare product, but it can be done where they can put 10 properties under one loan, and then you have a partial release clause that if you sell one, then they reduce the line by so much money. Hardly anybody does them, I'll be honest, because when you nail it down, the terms are worse than if I just individually do them, right? So what we do, once you have a client's file in my office, I can do 10 loans for them concurrently, and it'll feel like one loan to your client. So most of them choose that, because I'm gonna get them at least a point lower on their interest and about a point or 2 lower in cost to not do a blanket loan. Only because it's a rare product and not many people offer it, so they rip you off on it. So, any other investment questions?
Yeah,
All right, perfect. Asset-only loans. Oh, look at this. We also lend to people who literally own marijuana businesses, which I'm going to flick a coin out here and hit 3 dispensaries. Okay. No other bank that I know of or no other lender is literally lending to people who own the businesses, not the people who work there. Everybody can do that. It's the people who own them. Yeah, it's just a rare product. I have one investor who wants it because they're scared that it's not federally legal. They're scared that if it becomes federally illegal, which it's not, then their note will be due or something like that. Yeah. You just got to hang out with a bunch of stoners at a bank. No. But you never, those bankers, let me tell you. Asset only, and then I'm going to leave you with one thing. Asset only, I did a loan for Hulk Hogan's ex-wife, Linda. 2 loans actually for her. She called me and interviewed me and got referred by another agent. And her interview question was this: do you personally know my ex-husband? And I'm like, no, ma'am. She goes, you're hired. I was like, that was easy. So anyway, so I gave her a conventional loan. Linda doesn't work, by the way. Linda is Hulk Hogan's ex-wife. That's her job. And I closed her on a Fannie Mae loan. Her Fidelity guy from California who manages millions of dollars for her couldn't figure out how to do a conventional loan with her assets. I figured it out in an hour. and I closed it, and the guy called me all pissed off because I took the loan from him and he had to provide a bunch of asset documents to me. But we can close that on non-QM, QM. I closed a loan on asset only for a guy that had $26 million of Canadian marijuana stock in his account. Canadian marijuana stock, and we were able to not even secure it, just use it. He took 20% out of it and we closed. Freaking awesome. I think you're getting the point. Just call me for everything. But I do want to leave you with one thing that is near and dear to my heart, and that is something that nobody talks to agents about. There's reverse mortgages, right? I'm not going to sit here and show you slides on it. I'm just going to tell you the story of my grandma and why it's so important to me. About 20 years ago, my grandfather died, and he left my grandma with a small mortgage of about $50,000 on about a $500 monthly payment. Well, she was only surviving on the Social Security, and that was it. It was like $1,500 a month. And I would go visit her every once in a while when I was a young mortgage broker, and I literally saw her fridge like dwindle, like food was not in her fridge because she used to feed me all the time, right? So I noticed the food in the fridge and the Yoo-hoos and all that shit, and it wasn't there. And so I just asked her one day as a young broker, I'm like, Gladys, I'm like, what's going on? Are you not going to the grocery store? Do you need help or something? And she started crying, and she's like, listen, since your grandfather died, I'm so tight. I have a mortgage still. She was 82 years old, still paying on a mortgage. And I'm like, holy shit. And I had just gotten exposed to the old reverse mortgage product. And so I said, well, you have all this equity. I said, why don't you let me try to do this loan for you? So we did it. And it was the greatest thing that I've ever done, for her. She told me when she passed away, and I'm going to save the best for the last, that she lived some of the best years of her life between 82 and the day she died. And so here's how it worked. When I gave her this mortgage, first of all, you don't lose your home. It's a total misconception. Since 2014, you cannot lose your home through the reverse mortgage unless you don't pay your taxes, right? That's the only way you can lose your home. It has nothing to do with the mortgage.
What if you move out and go to ALF?
You can sell the house. So the common misconception to a reverse mortgage is that it's any different than a regular mortgage. It's not. It's just a regular mortgage with one difference. Instead of you paying your principal and interest every month to the lender and your balance going down a tiny, tiny bit every year, every month, your interest, only interest, because there's no principal on it, is deferred against the principal balance. So I'll give you Gladys' example. In Gladys' example, you can get 4 benefits of a reverse mortgage. Not everybody will get them all. And by the way, these are for purchases as well. That's the reason I'm explaining it to you, because on a purchase, you can qualify somebody for about 40% more on a reverse mortgage than they can get on a conventional loan. You got to be 62, and here's the 4 things that Gladys got. If you qualify for all of them, first thing they do is pay off the mortgage. It's a refinance, right? So we paid off the 50 grand. She has no mortgage payment for the rest of her life. Doesn't matter how long she lives. And if you have a spouse, same for them. Doesn't matter if one goes in a year and the other goes in 20 years. Nothing for life. Benefit number 2, cash out. She got about $30,000 the day of closing. All right? She went and bought a brown Toyota Avalon, ugliest car I've ever seen, but I tell the story because it was the first new car she had ever owned in her life at 82 years old. Made a very happy woman. So she got her cash. She has no mortgage payment. Now, her mortgage payment was $500 a month. So by having no mortgage payment, now she basically had $2,000 a month to live on, not $1,500 of Social Security. So it upped her $500. She got $30,000. That helped her big time, right? Then she got a monthly payment for the rest of her life. You can choose terms and get more, but she chose life. Probably didn't need to, but it worked out very well. The joke was on the bank. The bank gave her everything because in a reverse mortgage, they don't give a crap about credit. They don't care about income. We literally just did one for a lady who her house was being sold on the courthouse steps in 2 weeks, in foreclosure for months. And we closed out the foreclosure, paid off the freaking lender, and this lady now gets to live in her family home for the rest of her life. So you have somebody that's in trouble, which a lot of people are right now, is why I'm pushing education on reverse mortgages. Gladys got the she got no more $500 payment, $30,000 in cash. They gave her $550 for life. So she just went from having $1,500 a month to $2,550 a month overnight with $30,000 in her bank account. And then the fourth benefit, and a new car. And the fourth item you can get was an equity line of credit. If you have enough equity, after 12 months, they give you a line of credit on your house, which grows by 6% a year if you don't use it. But they gave her another $30,000 line of credit. Well, it worked out really well because she actually got an infection in her foot and lost her leg from the knee down during that first year. Got a prosthesis, learned to walk again at age 83. She ended up using that credit line to put ramps in her house and chairs and all kinds of cool things to help her out. She started going on cruises with her friends, started playing bridge, started doing all this crazy stuff. Gladys lived to 93, right? She outlived, the bank thought that they already had her 1 foot in the grave because the average lifespan for a female in Florida at the time was 79 and a half. So they gave her everything, thinking, she's gone in a couple of years, we're just gonna give her the kitchen sink. She lived so long that something happened that's very rare in reverse mortgages. The house was worth less when she died than she owed. It also happened because we did this mortgage in like 2004, and what happened in 2008, right? And she lived to 2000, about 14, right? So here's the best part. When she died, she actually had saved money that she never had before. She left money to all the grandkids. The house was underwater by $60,000. It is a non-recourse loan. The bank cannot touch anything. She got to give us all little gifts of a couple thousand. She had no recourse on the mortgage. My dad and I signed the mortgage over to the bank with no recourse on her estate whatsoever. It was freaking amazing. Now, a new rule is in place since this happened. If it was after 2014, my dad and I would have another option. Instead of just signing it over to the bank and going like this, they would have been forced to sell us that house at 5% under the appraised value, regardless of what she owed. We would have owned that house on the Hillsborough River for $160,000 if that new rule was in place. And that house right now would have been worth close to $1 million. So anyway, there is no negative to reverse mortgage. I teach you guys about it because so many people are being hurt by inflation right now and the rising price of goods, and Social Security is not keeping up with it. This is for your friends, it's for your family, it's for your clients. If you're an agent and you have a client over 62, especially if they say they're a cash buyer, stop. Call me, let me talk to them, let me show them how they could put down 60% instead of 100%, keep the rest in an investment account or somewhere that they can make some money on it and have no payment for the rest of their life. It's amazing. Question on that? So, I left you guys this in the thing.
You're a winner here.
Yeah, I'm a winner, chicken dinner. Oh, I'm picking a winner, yeah. She didn't put it in there, but the website is reverseguru.com. That's where you can get all the information. Who's gonna win the radio? Yes, you may, absolutely. Uh-oh, where'd my cards go? There we go, got it, here's a card. Who is that? Jessica Beggins, yeah! Wow, congratulations. I'll text you later. I record on Tuesdays at iHeartRadio, so we can do it over the next month or two whenever you're free.
Okay.
We'll do that. Cool. Thank you. Guys, thank you for letting me come and present. Much appreciated. That's